I think that we're not necessarily moving into a bear market. I think that we've seen a correction within the bull market. The bull market is at its late stages. It's been going for 6.5 years, but I don't see a recession looming in the global economy, and therefore I don't see that we are entering a bear market. What I think is happening is that a lot of liquidity has been pulled out of the equity markets, either sovereign wealth funds being forced to sell out to fund their economies, or it could also be retail investors that are panicking over the volatility. But when I look at the businesses and their earnings trajectories as well as the valuations, I don't think that we're going to be entering a bear market with where the current valuations are sitting today. I think what's behind the sudden shift in sentiment and selling since the start of January, a combination of factors. So some of the factors are things that have been around for 6 to 12 months, so concerns about China and their slowing economy. I think that the Fed raising rates in December also created a knee-jerk reaction where potentially some liquidity was pulled out of equity markets. I also think that sovereign wealth funds and a number of funds who were reliant on the energy price were forced to sell equities to fund their local economies. And I think also that the Chinese potentially have been pulling money out as their foreign currency reserves have been dropping. So a combination of that pulled liquidity out of equity markets, and then that created a panic amongst retail investors who also started to pull money out due to fears that the stock market was correcting. The way that we invest in a market like this is that we'll look to initiate a position and then average in over a period of time. So it's hard to tell where stocks move in the short term and where you might be investing in a company thinking that it's cheap and good value today, and it could potentially get cheaper. So we take the approach of always having some cash on the sidelines that you can average in over a period of time. In the current market, we're actually finding quite a number of new opportunities, so companies that we've been waiting to buy or potentially have sold out in the past and now getting opportunity to buy back in. So that's how we're deploying the cash. We're also topping up some of our existing positions, but we're looking at the current environment to enable us to diversify the portfolio and add to some new positions. Considering that I am quite optimistic on the US economy, I am finding a lot of opportunities in the US in traditional domestically orientated industries and companies. So US media companies, we're finding quite a number of opportunities like Fox Group. I also think that the transport sector in the US as well as the home building sector is throwing up quite a number of opportunities. So we do have quite a number of tech positions in the US. We like online businesses, so businesses like Xiaopin in China. We also like software businesses, so businesses like Oracle in the US, EMC. These businesses are trading at very attractive valuations with very strong balance sheets, and these are companies that generate very strong free cash flow. So those are the types of businesses that we're looking for. I think that some of these companies like Oracle or EMC are being undervalued because a lot of investors have been piling into growth stocks over the past 3 to 4 years, and there's been a lot of money flowing in and overpaying for high growth stocks and ignoring the slower growing value companies, and the tech sector has a number of these, as I mentioned, companies like IBM, Oracle. So I think that those are the opportunities that we're seeing in the tech sector. So one of the new positions that we've initiated is Fox Group. It's a company that we've been covering for quite a number of years at Perpetual. Perpetual has been an investor in News Corp and Fox for, I'd say, over a decade when it was listed in Australia. We sold out a few years ago as we felt that the valuation got full, and recently I've been buying the stock as the stock price has come down over 30%. I've always thought it's a wonderful business with tremendous assets. It's got a great trajectory in its earnings, it's got a strong balance sheet, sound management team, and now you can buy this high quality media franchise on a P of 13 times next year. And 2 years ago we sold it out at 20 times. So those are the types of opportunities that we're finding, and those are the types of businesses that we're buying into the portfolio today.